worth $71.8 billion. Warren Buffett, the king of investing, once said, "I always knew I was going to be rich. I don't think I've ever doubted it for a minute." And he did that through investing in the stock market.
That's right, Brendan. Now, not everyone feels the same way about the stock market, but today we're going to be looking at the top 3 misconceptions about investing and the stock market. I'm always hearing, the stock market is just too risky for me, which could be very true.
Right, it's all about what kind of investment you plan to make. You could put all your savings money into a penny stock that you think is just about to explode, which might really pay off big time, or you could lose it all.
Or you can go with much safer alternatives, such as an S&P 500 index fund. The S&P 500 broadly measures the performance of 500 large companies listed in the stock market. Some of these companies include Apple, Amazon, and Facebook.
Being one of the best models for the stock market, the S&P 500 has led to, on average, 10% annual returns. You can even be safer by choosing a low volatile index fund, something such as SPHD, which comprises of companies whose price moves less on average. Now, you don't have to invest alone either. You can choose a brokerage firm such as Vanguard or Betterment, where you can select the amount of risk associated with your portfolio, and the professionals there will adjust it for you.
You can also choose a mutual fund, where you and other investors have a professional invest for you. Yes, there are fees associated with their services, but you don't have to worry about selecting and adjusting your portfolio of stocks and bonds. On the other hand, purchasing individual stocks allows you to manage your investments with a hands-on approach, using your own judgment and understanding of the market. Now, the second misconception I hear a lot is you need a lot of money to invest in the stock market.
While there are some investing options that require a minimum amount to invest, there are plenty of opportunities to invest with a little amount of cash. In fact, the brokerage we use, Robinhood, has no minimum balance or deposit you need to make.
While big stocks like Apple and Facebook are hundreds of dollars and expensive to invest in, there are countless other stocks worth under $10 a share. There are even stocks that fall below $1. But be wary, as those companies may be delisted or taken off the stock market because the stock price is too low.
A lot of brokerages are now offering the ability to do fractional shares, where you can invest in huge companies like Apple and Facebook with literally $1. That's right, you can take the dollar you found off the street and own a very small piece of Apple. And the third misconception is you need to be really smart to invest.
According to columnist Howard Gold of MarketWatch, fewer than 1% of mutual fund managers persistently beat the market based on superior market timing or stock picking skills.
And that's their job. They spend countless hours trying to study the market and make the right decisions for their clients. If these professional mutual fund managers can't outsmart the market, then we probably can't either. So don't stress it.
With that being said, we hope you enjoyed the video, and if you'd like to start investing today, commission free, use our code in the description and you'll get a free stock. Thanks for watching.